Okay, this video is just a summary of what caused the global financial crisis, and then in the next video we'll look at some of the ramifications that had for not only America but for Australia and other global economies. I'll also put the link up to that video we watched in class that you can use as a bit of revision for looking at the GFC as well. So first of all, what caused the global financial crisis? Well, basically, from a really simplistic point of view, it was caused by the banks lending too much money. The banks were lending money to really risky investors, and they were doing that because they were packaging up these loans and then reselling them in the form of mortgage-backed securities. So they were taking on what we call these subprime mortgages, which were these really risky mortgages that didn't involve any credit checks, they didn't involve any income verification. Basically, they were just loans that they were lending out to anybody. Anybody that basically wanted a loan was getting them. And the banks were not exposed to the risk because they were repackaging these loans up and selling them to investors in the form of mortgage-backed securities. So because the banks weren't taking the risk, they were willing to take on loans from anybody, and then they were selling them in the form of these mortgage-backed securities, which was basically an investment that people like retirees, investment companies, everyday Americans were investing in with the idea that they would get a guaranteed return as house prices increased. So they basically decreased their lending standards so they could sell as many mortgage-backed securities as possible and started lending out money to whoever really wanted them. Why did the investors believe these mortgage-backed securities were a good investment? Well, basically because if the homeowners defaulted, they would always just claim the assets or the house anyway. So house prices had always gone up throughout America's history. House prices went up and up and up. So worst case situation was that the people that had bought these homes were defaulting on their loans, and therefore the people that invested in these mortgage-backed securities, just like the bank would get access to the home at a higher price. But what eventually happened is these mortgage-backed securities were filled with all these subprime mortgages. So they were filled with all these mortgages that people didn't have enough money to pay off and eventually were not going to be able to pay back. And the credit agencies made these investors think that they were investing in these AAA credit rating mortgage-backed securities, when in actual fact, a lot of what was in these mortgage-backed securities were really risky loans. Loans that people couldn't pay off, that were really risky and were likely to default. So the risk of these mortgage-backed securities increased more and more as time went on, and eventually they basically started to make a loss on these mortgage-backed securities. So why did housing prices go up so much initially? Well, basically because there was so much demand for housing. You've got to remember that housing is based on demand and supply, and because the banks were issuing so many loans, there were so many people able to buy property, and therefore the demand for property outweighed the supply. And then that happened from sort of the period from the early 2000s all the way to 2007, 2008, and then the GFC took over. So basically what happened is that's when too many homeowners started defaulting on their loans. So the financial institutions started to realize that these mortgage-backed securities weren't a good idea anymore, and they stopped buying them off the banks. So they stopped investing their investors' money in these mortgage-backed securities because they realized that too many people were going broke and they were too risky in investment. And because the banks could no longer repackage these mortgage-backed securities, they stopped lending money as well. So they reduced the amount of money that they were, basically the amount of mortgages that they were allowing the average homeowner to invest in, and therefore that basically meant that there was less demand for property. So once the banks stopped lending out these mortgages because they couldn't repackage them and resell them, what essentially happened is property prices started to fall. So as homeowners started to default on their mortgage, they had to get rid of their house because they couldn't afford the repayments. So all these houses were getting supplied to the market. There was this massive influx of houses being supplied to the market, but there wasn't any demand, or wasn't enough demand because it was too hard now to get a loan. So while there was lots of supply of homes, there was very little demand, and therefore the prices of property went down and down and down. So house prices went from sort of the average of 400, 500,000 to 300,000 to 200,000. Basically what happened is the housing market crashed. So why did that lead to a GFC? Well, for homeowners, it meant that they either had to default on their mortgage or they were left with mortgages that would double the value of their house. So even if they wanted to sell their house, they basically, now it was only worth half as much. So the loan that they had taken on was double the value of their house, which is a really bad situation to be in. In terms of the banks were also in a bad situation because they had basically brought all these mortgages now that they couldn't sell on to the financial institutions. So they had given these people, $1 million to pay for a house, but they hadn't been able to. But now that those houses are only worth $500,000, as people were, defaulting on their houses, the banks got access to the properties, but that wasn't enough to cover them for the amount of money they'd lent out to whoever was selling the place in the first place. So the banks had liabilities of millions of dollars more than what the value of the houses that they now had access to. So the banks were unable to survive because their liabilities exceeded their assets, and therefore they went broke. The financial institutions, they suffered because as a result of selling these things called swaps, so at the start of the movie how Christian Bale and Steve Carell and all these people invested in these swaps, they had to pay them all out because they had invested against the housing market. So the financial institutions were assuming that there was no chance that the housing market was going to crash, so they sold all of these swaps, and then they had to pay out billions and billions of dollars to these investors. And also the financial institutions lost money because a lot of their clients withdrew their money as well, because they had invested that money in mortgage-backed securities, and now they had lost a lot of money on that, so they didn't want to invest with these big financial corporations anymore. And finally, those who invested in mortgage-backed securities had lost significant amounts of money as the value of property fell, and therefore they had a lot less money as well. So financial institutions suffered, those who invested in mortgage-backed securities suffered, homeowners suffered, banks suffered, and that led to a recession in America and had ramifications for the rest of the world. And we'll talk about that in the next video.